Wealth taxes historically have not done anything like what they're promised to do. It's a really simple message. It's bollocks. And the people who are doing it are irresponsible.
How unfair is our tax system and how should we fix it? After 25 years as a tax lawyer, Dan Neidle now exposes high-profile tax avoiders and campaigns for a fairer, more transparent system.
We should be taxing land more than we tax labour. Take council tax. We could be living on Mars. It's the year 3000 and still your bubble will be taxed on 1991 valuations because no politician wants to touch it. If you had a less complicated system and fewer tax lawyers, that is a win. I am your evidence.
Your early retirement is a testament to the complexity of our tax system.
Correct. It's the fact that I could do that is a searing indictment of the tax system.
Yeah. So I would like to start with a little bit about you, if that's okay, and why you do what you do. You were called the tax dodger's worst enemy, and you were a high-level tax solicitor for a while, and you retired, but retirement to you is what you do now, which you seem to be working harder than ever. Why did you make that decision?
Why did I make the decision? So I became a tax lawyer a bit by accident. I didn't start out wanting to be a tax lawyer. If you told 18, 20, 23-year-old me I'd be a tax lawyer, I probably would have been insulted, offended and confused. But I discovered I rather liked tax. So became a tax lawyer, was fairly good at it, became head of tax at a big law firm in London. So, spoiler alert, corporate lawyers are overpaid. And I realised at some point during lockdown when a bunch of complicated personal stuff happened to me, as it did to many or even most people, realised I didn't actually need to work anymore. So I thought I'd retire. But I love being a lawyer. So I'd always been, if you talk to a bunch of professionals in pretty much any field, they will start whining about how badly the media covers their subject. I know someone who's a dentist. They whine about how dentistry is covered really superficially in the media. Certainly economists think that. Tax lawyers definitely think that.
Influencers are the same. We're all in Dubai scamming people with crypto.
Exactly. But the thing about tax, which is different from, say, dentistry, is there isn't some organised lobby group lobbying in favour of brushing your teeth with sugar. No, nobody does that. But in tax, there's organised and pretty well-funded lobby groups arguing on the one hand that we should be cutting tax massively, on the other hand that we should be putting these magic taxes on the rich. And these people on both sides, not evidence-based, they're ideological. And that means that we have a media debate which sticks to these polarised extremes and very little evidence-based stuff in the middle. And I thought, well, this is my opportunity to actually stop whining and maybe do something a bit about that. And I'm only one person, but I know quite a lot of other smart people who'd like to make a difference too. And maybe we can put something together and do something. And that was the idea.
The actions that you've done that are through the think tank?
Yeah, we've got a think tank, Tax Policy Associates, which is kind of unusual because the idea is we want to be completely independent. So we get lots of offers of funding, we turn them all down because we don't need it. The brains for it is coming from a Rolodex full of about now 60 people across the country, all expert in different bits of law and tax. And when something comes up that's in their area, I work with them. Sometimes they're just reviewing something I write. Sometimes they're writing the whole thing. It depends. But you've got this network of really fantastic people, and we can punch well above our weight and put out policy papers, investigations on tax. So that's the idea.
We're going to get into some of those investigations, some of the recent ones you've done as well. But I'd like to start a bit more high level and ask, how do you think that we compare as a tax system to, say, our peers in the OECD or the G7 or any of these kind of, international peers that we might pit ourselves against?
So most countries' tax systems in the advanced democracies are fucked up. And
Amen.
And the reason for that is what you could pompously describe as political economy. So a thing comes along and government needs more money or needs to placate a particular group of people. So let's twiddle with the tax system. And it's a tiny thing that's not going to make a difference. Time goes on, that tiny thing becomes worse and worse. So example would be the clawback of child benefit, which was introduced at £50,000 when not very many people earned £50,000, was kept at that point for years. You ended up creating a high marginal tax rate for really quite a significant proportion of the country. And it just becomes locked into the system. And over time, it becomes more and more important and hurts more and more people, but it also brings in more and more money, so it's harder to change. And then you magnify that across the whole of a tax system, and you end up with a bunch of kind of accumulated cruft, which would take real political will to fix. But that's probably going to be unpopular. Some people are going to lose. So pick something that's wrong. Take, say, stamp duty. Anyone buying a house knows that stamp duty is a bad tax. It's lost money. It makes it, if you're someone, say, living in London or living in West London in a £400,000 house, and you want to move to East London to a £400,000 house, you're not going to do that because of the stamp duty. You'd just be throwing money down the toilet. So stamp duty stops people from moving, makes people unhappy. It glues up the labour market because it's much harder to move in search of jobs. Pretty much all economists, left and right, agree that we should scrap it and replace it with an annual tax on the value of real estate, a land value tax, or often it's called. But some people would lose out from that. If you are a delightful old lady living in a very large house, you don't care about stamp duty because you're not moving, but you would pay an annual tax. And there'll be a bunch of cases like that. There'll be a bunch of political heat for actually changing things. So nothing gets changed.
Do you think the vocal minority that lose are what prevents it then? I saw your comments around farmers where you were talking about farmland, and obviously this became very big news that lots of farmers are going to be punished, and you whittled it down to saying you actually think it'll be a handful of farmers who are actually affected. You said something, you were like, inheritance tax has always been a tax for people who didn't trust their kids. Because you just give the asset before you die if you want to avoid it.
Yeah, unless you're super old. So free inheritance tax advice to anyone listening. If you are relatively young, like under 70, and relatively healthy, and you're worried that you and your partner might fall under a bus and your kids suffer a huge inheritance tax burden, the answer is insurance. Just make sure you've got enough life insurance to pay it. You don't need to do anything else.
So you take out a life insurance policy to the value of the tax. So when you die, that pays the tax bill and they get the asset.
Yeah, and in some cases you can get specialist policies that cover kind of both of your lives. Some cases you don't need to bother. But either way, if you're relatively young and relatively healthy, it is cheap. It's a lot better than any way of avoiding inheritance tax. And then when you get older and the life insurance becomes more expensive, you give your stuff to your kids.
How much waste is generated by a system as complex as the one we've got?
Gosh, I'd love to be able to put a number on that. I don't know how to put a number on that, but
do you think there is waste, like quite a lot? From your experience.
Sorry, my entire existence is an example of waste. So as long as you have a complicated tax system, you absolutely need tax lawyers, because otherwise nobody could do anything. But if you had a less complicated system and fewer tax lawyers, that is a win. Everyone will be doing something more productive. The money will be spent on something more productive. So I am your evidence.
Your early retirement is a testament to the complexity of our tax system.
Correct. So the fact that I could do that is a searing indictment of the tax system.
Yeah. And do you think more tax is the answer, which is the way we tend to skew at the minute?
Yeah. So I talk a lot to people across the political spectrum, kind of left, right. And when I talk to people on the right, like the Centre for Policy Studies and the Adam Smith Institute, I can agree with them on most of the features that a tax system should work. Now, I might want a more sort of Scandinavian-style welfare state, and so higher rates, and they presumably would like way lower rates. But the rates are the boring political question. That's the easy bit. The key question is, how should the system work? And there's a great deal of consensus by intelligent tax people across the political spectrum on sort of how the system should work. The disagreement about rates, you can sort that later. The problem is that whilst the tax policy mafiosi all think the answer is this, the politicians, the smart ones, know the answer is this. They know how to do this. But they don't know how to do this and get re-elected. And so you don't have tax reform. You don't have simplification of corporation tax, simplification of VAT, flattening of income tax, elimination of stamp duty, land tax. You don't see those changes because it's politically hard. Take council tax. So council tax of this house and every other house in England based on 1991 valuations.
Crazy.
We could be living on Mars. It's the year 3000 and still your bubble will be taxed on 1991 valuations because no politician wants to touch it. Because if you revalue everything and you do it fairly, there would be no increase in tax overall, but you'll have winners and losers.
But like council tax, though, everything we think that has a simple solution seems to like will piss off more people. So if we do like council tax by the land value, if you're in Westminster and you've got like a really nice house, you've got an expensive land, your council tax is going to be much higher than someone in Blackpool. Everyone in Blackpool, their council would have very little money, whereas the Westminster council would have loads of money. So therefore the north-south divide would just be greater.
You couldn't do it like that for exactly that reason.
So are there any solutions for any of these that don't have effects, knock-on effects?
So right now, the way that local authorities are funded is of Byzantine complexity, and it ain't the case that everything raised in Westminster stays in Westminster, everything in Blackpool stays in Blackpool. To some degree it does, but to a great degree it doesn't. And if you introduced a land value tax, then you would tweak the funding allocation.
You'd redistribute from the centre still. So you couldn't have full devolution. You would still need some kind of, every person in the UK needs X amount, and you would just reallocate, because otherwise, like Blackburn would just...
But the other problem is, if you imagine a doctor on 70, newly qualified doctor, 70,000 or so, living in London, a newly qualified doctor on 70,000 living in Blackpool, it's kind of rather unfair if in addition to the much higher house prices in London, they get a big land value tax bill as well. So you couldn't make a pure land value tax, which is directly proportional to the value of land, or you would be just crucifying moderate earners in London and the southeast. So it is more complex than a simple percentage, but absolutely it can be done.
You say there that there's lots of people within your space who know how to fix the tax system.
Yeah.
The political will's not there because people won't get re-elected. But a lot of the conversation we see about taxation at the minute leans more towards tax the rich more. That's the conversation I'm seeing.
Yeah.
Do you disagree with that sentiment then? Do you not think that because that's the message that's gaining popularity now?
Yeah, it's a really simple message. It focus groups really well. It polls really well. It's easy to get across. It's bollocks. And the people who are doing it are irresponsible because they are wasting time. They're wasting their political profile in search of something that wouldn't work. So why is that? So take a look at the countries who spend more on the welfare state and more on state services than the UK. So that is, France, Germany, Netherlands, Belgium, Sweden, Denmark. Have a look at them. Have a look at the amount of tax paid by the rich. It's kind of comparable. Have a look at the amount of tax paid by the median earner. It's much more. And that is not some grand conspiracy. It's simply because if you want to raise large amounts of money, you kind of have to raise it from the centre.
From a large block of people.
Yeah, I did a chart which charted the tax burden on the median earner going kind of across the x-axis. This is rubbish for people listening on our podcast, but bear with me. So the tax burden on a median earner running across the horizontal axis and the size of the state going up the vertical axis. So the UK is kind of middle-ish. And then above and to the left of the UK, you've got all the countries with a bigger welfare state than the UK who tax the median earner less. Guess how many countries there are with a bigger welfare state that tax the median earner less than the UK? The answer is none. None. So can you raise a bit more tax by taxing the rich? Sure. Can you move the dial on anything by taxing the rich? No. And when you look at what's actually proposed and you drill down through it and you sort of look at the evidence of what taxes like that have collected here in other countries, you see they just don't work. So 15 years ago, there were about 12 countries in the OECD with wealth taxes. Now there's 4. Why is that? It's because they don't bring in much money. The problem with wealth taxes is that a lot of wealth is held in private companies, and private companies often don't produce much income. Imagine you're an entrepreneur, you've created this business, on paper it's worth 100 million, $1 billion, but it's not making any money yet. So how do you fund payments on a wealth tax out of that? And the answer in most countries has been, well, let's exempt people like that and companies like that. But once you do that, suddenly people are going to sell their shares in public companies and buy private companies to escape the wealth tax, and your revenues fall, and the revenues have generally been small. The wealth taxes that are being proposed today are very different from historic wealth taxes. They don't apply to most people. They apply only to a very, very small number of people. And no one in the world has created taxes like that before. So looking at the history is not much of a guide. These are very different and dangerous taxes. And the reason they're dangerous is you'd be relying on just a few thousand people to pay a lot of that tax. So they are exquisitely sensitive to people getting up and leaving. And leaving for someone worth £1 billion is very different from you or me leaving, because I mean, how many days do you spend in the UK every year? You probably spend like 340 days or something in the UK every year.
Yeah.
A billionaire probably spends like 100 days in the UK, tops. And if they reduce the number of days they spend in the UK by a couple of weeks, they're not UK tax resident. So it's very undramatic for a billionaire to not be resident in the UK. It's very easy. So if you suddenly create a tax, which means they're going to have liabilities of tens of millions, even hundreds of millions a year, what do you think they're going to do? And historically, the wealth taxes haven't worked like that. They've raised very little money. They haven't seen big effects. The promise now is create new wealth taxes, which are very different, raise large amounts of money for a very small number of people, and we're not going to think too hard about how people will react to that. That's a bad policy error. Take Spain. A lot of people say we should copy Spain's wealth tax. Spain introduced a wealth tax on extraordinarily large fortunes, they call it. This tax raised last year 600 million euros, an absolute pittance. So when people turn around and say we can have a wealth tax modelled on that and raise 25 billion quid, come on. So yeah, wealth taxes historically have not done anything like what they're promised to do, and the people pushing them are not doing any real thinking, any real analysis, not showing any imagination. For them, it's a nice line that performs well in focus groups, performs well in polling.
One of the goals of personal finance is to take the money that we earn and to put it to work, so that one day we can hopefully stop working. But I often speak to company owners who have got plenty of money, quite large sums of cash, just sat in their business bank account doing absolutely nothing. So why not at least put that money to work? This is why I'm happy that we're working with Tide. They offer an instant access saver which I use as an account to generate interest on excess money for things like tax savings. New members can earn up to 4.22% AER variable for up to 6 months. I say up to because it depends on how much you deposit in your account, and the more you save, the higher the rate. You can get this deal, plus you can get £100 cash back if you fund your Tide Instant Saver account with £5,000 in the first 30 days, if you use code MAKINGMONEY. T's and C's apply. The code is MAKINGMONEY, all one word, or you can use the link in the description where you'll also find all of the offer and the full terms. The variable rate is correct as of the 8th of May 2025.
You say you don't want to tax the rich because it's obviously there are less fewer of them than the median.
Not that I don't want to tax them.
You don't want to increase taxes on them.
No.
You just don't think it's that effective?
So we need to be careful when we talk about the rich. So if you take a banker receiving a bonus of £1 million, that bonus is subject to 15% employer national insurance. And then in the banker's hands, it's subject to 45% income tax and 2% national insurance. So overall, that's a rate of about something like 55%. I think that's fine. I wouldn't put that up. On the other hand, you'd have someone in private equity, say, who makes £1 million, and they're taxed on that now at the rate of, can I have the rate right? It's just changed, I think 34%. So why is that? Why are they paying a lower rate? Is it that we think private equity is more socially useful than banking?
They would say so, but a doctor's pretty useful.
Well, exactly. I mean, if we were to draw up a profession who we want to attract people in the UK by cutting their tax, and I gave you 100 professions to fill in, do you think private equity would be on the list?
No. Podcasters.
Right at the top. Yeah, but you don't have the ear of the Treasury. If you did, then podcasters would get a 5% tax rate, but you don't.
No.
So... Or what about someone who inherits £1 million? You know, someone who inherits £1 million could very often pay no inheritance tax or any other tax on that at all. So we need to be very careful about saying we're taxing the rich.
Can we talk about rich? Let's talk about the royal family then, as like that kind of rich.
The royal family is, I think, not. I'm going to be really annoying and not answer your question. I think it's not a useful thing to look at because that's dominated by a difference between what's regarded as crown property, which isn't taxed, and their personal property that is. And that's something that doesn't apply to anyone else. And the amounts involved are large enough for me to be very happy if I had them, but they're not large enough to make a difference to tax.
What about like a Grosvenor estate then?
Okay, Grosvenor estate. That's
kind of like, you know, the aristocracy of the UK. Or...
Yeah, so how come the Grosvenor estate pays so little tax? How come you can have dukes inheriting it one after the other and very little inheritance tax coming out? It's often said that's because of trusts. That's not right. I mean, trusts pay inheritance tax. They pay it every 10 years. They pay a 6% charge. So a big reason is the complete exemption from inheritance tax on agricultural property and business property. That has just been, broadly speaking, cut in half. So they are now going to be paying a bit more tax. It's not clear to me why they still get a 50% exemption. I mean, there is a pretty good argument for a small farmer or a small business owner having a lower rate of inheritance tax. When you're talking about many tens, hundreds of millions, even billions, that argument goes away. And inheritance tax wasn't originally introduced. The original estate taxes weren't introduced to raise money. They were introduced because it was thought to be bad for the country. You had large estates permanently owning huge tracts of land. And that clearly failed because 150 years later, we still have large estates owning very large tracts of land. So yeah, absolutely it makes sense to rationalise huge swathes of inheritance tax. And I've written about how to do that. So this is the boring answer. If you want to tax the rich more and more effectively and more fairly, the answer is looking at every tax that we have that applies to them, looking at where it's paid, where it's not paid, and fixing it. And you can raise 20, 30 billion by doing that systematically if you want to. But it's kind of boring and doesn't make for good posters. How much more fun to talk about a wealth tax and then ignore all the detail. That's what makes me angry about these campaigners, that they have large PR budgets, they have excellent media access, far more than me, and yet they're wasting their time, pissing their resources up the wall, arguing for things that will never happen. Pointless, absolutely pointless.
But to play devil's advocate, I do think that people get on board with the tax for wealthy because I think you said it, Albert Einstein said that tax is the hardest thing for someone to understand, to comprehend.
Yeah.
So, but the people that benefit from the complexity of the tax system tend to be the wealthy because they understand, they know people like you, they understand the loopholes, how they can save money. Whereas the average person, for example, I just started using an accountant for my taxes because I'm self-employed now. Whereas before I was PAYE, so I didn't worry about it. And my accountant, I did my own taxes last year. He did it this year. And I just found out from him that because I work from home, I can count my property as my office, so I get some of my money back because I work from home, so that's my office, so it counts as some of my rent money gets taken off my tax. But I didn't know that, my accountant knew that. So the average person who's just doing their taxes doesn't know these things. So they don't benefit from all these loopholes, which is why people are like, tax the wealthy, they're dodging tax, they're avoiding tax, they're smart, they know how to get the loopholes, whereas the average person on like 80 grand, 50 grand, 100 grand is just paying their tax.
Sure, but then if you're running a multi-million pound media campaign on this, you should be saying, let's close this loophole, identify a loophole, shut it. Simplification, let's simplify. And then you can pursue something that actually might happen. Pursue wealth taxes. You're wasting your time. It's not going to happen because even though your campaign is missing all the details that explain why a wealth tax isn't going to work, policymakers know that. No political party is going to adopt it. The Treasury knows why these taxes don't work. So it's really frustrating to see time and money being spent on campaigns that aren't going to achieve
Maybe
anything.
it's the political will that you pointed to that was needed. So maybe, like the outcome of these campaigns is not that we get a wealth tax, it's we get a population who go, we need to do something about taxation.
But it's not, you see. It could be saying, you could imagine a very long-term campaign to persuade people that if you want better public services, you have to pay for them. But that's not it. The campaigns are, if you want better public services, we can magic them by taxing the rich in a way no other country's ever done it. And that is, it ends up creating an anti-tax attitude where people who think that they're left-wing and think they believe in a better welfare state resent tax and don't think they should ever pay more tax.
You can see why people would resent tax at the minute because the tax burden's gone up and in percentage terms, and the public services have not improved, right?
Well,
I know this is debt interest.
Has the tax burden gone up? So overall as a country, definitely the tax burden's gone up. For the median earner, it's gone down. The median earner is paying less tax today than they were in the 70s, paying less tax today than they were 20 years ago. The Tories increased tax quite significantly on the richest 10%. It's something no one talks about. There's like a little political conspiracy. The Tories don't want to say, hey, look how great we were at taxing the top 10% because their own donors would be furious. Labour certainly doesn't want to say, you Tories, you increased tax on the rich. That's outrageous. So no one talks about it, but it's true.
Yeah.
Now, they certainly didn't increase tax a lot on the very, very wealthiest, the top 1%, 0.1%, but absolutely, that increase in tax that you see, and it's a pretty large one, was on the top 10%. People always think they're overtaxed. No politician's ever going to say, hey, people of the UK, you are historically undertaxed if you're a median earner, and as a country, you're undertaxed compared with most of the rest of the OECD. No one's going to say that. We would like to think we're overtaxed, but we're not.
I think it's value for money as well is probably the issue, right? If everything seemed to work okay and the country felt great, people probably wouldn't mind.
Well, I'm a bit of a pessimist about this. I fear that you could have a successful society with lower tax than we have and a much lower level of state support and public services, or you could have a successful society with much more generous welfare state and much higher taxes, meaning more taxes on the median earner. But I worry that there isn't a stable middle ground, which is where we are at the moment. That
You either have, American public services and American tax levels, or European public services and European tax
maybe
levels.
it doesn't quite have to be those two extremes, but some way towards it. Yeah, I don't see other countries in the OECD at the level that we are.
What do you think is a better
kind of
system?
odd.
Low taxation, low government, or high?
I'm not. I try not to talk about politics publicly. I have my own political views. I have no expertise in that. I have nothing very interesting to say.
Who did you vote for?
I'm not going to hide my political preferences. I voted Labour. I'm a member of the Labour Party.
But you speak more to the Conservatives, is what you've said.
No, I think on tax policy, I agree more with the likes of the Adam Smith Institute than many of the lefty think tanks. But then if you look at successful welfare states like Sweden, they do it by having a simple tax system, higher rates of tax, but simple. In fact, I don't think you can have high rates of tax and a messy, complex tax system.
Before we move on to specific taxes and look at them in detail, because I think your views on this is a platform where we can maybe bring people on board with changes around VAT and things like this. I want to just keep on the tax avoidance thing, because I can hear the audience saying, all we've seen over the last few years is examples of wealthy individuals sheltering money, the Panama Papers, and you just again and again and again, it's like, oh, they get to just opt out of tax, whereas mine just gets taken from my payslip every month. So how can we say to those people that is a fair system and that indeed they should even potentially pay more?
Well, I'm going to give another boring, nuanced argument, which is why I'll never be invited onto Question Time. So the first part of the point is that tax avoidance is really small as a percentage of the economy. So the HMRC estimate, and it's a pretty good estimate, there's about £40 billion tax gap. That's the difference between the tax that should be collected if everyone behaved, the tax that is collected. Most of that is tax evasion by small businesses. It's men in white vans.
Cash in hand.
Yeah, now some of that is the very wealthy, and exactly how much is unclear. It's probably somewhere between 1 billion and 5 billion. Now, that is not nothing. And we absolutely should be collecting it. There's things that could be done to collect it, but it's not going to move the dial. So populist ranting about tax avoidance by the very wealthy is... it can be slightly over-egged. There's absolutely things that can be done. So take offshore accounts. Almost every country in the world has now signed up to a system that means accounts get automatically reported across the world. So if I open up an offshore account in Bermuda tomorrow, at the end of the year, HMRC gets a nice report of what's in there. That is a massive change. Can you still hide money? Sure, there are definitely ways to do it, but it's much, much harder than it was. So things have changed, and things can continue to change. There's about to be an extension of those rules to apply to cryptocurrency, which is an obvious way today that someone can stash money and not be taxed on it.
So you're saying that the bigger tax avoidance issue in the UK is small businesses getting paid in cash.
Tax
right?
evasion, cash in hand is absolutely where it is. Yeah. I mean, overall, that means the UK loses something like 15 billion in tax a year. So nothing comes for free. Could we crack down on that more? Sure. Would it be a good idea? Don't know. I mean, you have to put up with a certain level of fraud in any system, because if you want to reduce fraud and evasion further, that has knock-on effects. It means more admin and hassle for honest people. It might mean, say, banning people from using cash, which I don't think would be a good idea at all. So tax evasion, cash in hand is a big problem. Are there things we could do about it? A bit, but probably not. It's not something we can end.
I think the individual, like you said, you go for your haircut and you're like paying cash or whatever. You're like, it's £10, it's £20. Whereas you see in the news, Starbucks isn't paying this billions or millions in tax, and this company's moved offshore and this person's moved offshore. So, and like my friends moved to Dubai to have less tax, and my other friends moved to Thailand to have less tax. So you're kind of like, I'm here, I'm paying all my taxes. This is like a little savings for me. So you don't really feel like it's affecting the whole country, but when you say like the numbers, it is quite drastic.
It does. Do you know people who've moved to Dubai for tax reasons?
We were talking about this in another episode, and Damien's like, it's just stories,
I know lots of. I mean, the incentive for me to base myself in Dubai or Portugal is pretty high as a creator, and I could just set up my studio studio to look exactly the same and pretend that I'm in England. Like, you know, I could do that. And there's lots of people that have gone out there, and there's lots of people driving Lamborghinis in Dubai that couldn't do it if they were here because, you know, it's basically the tax money that they're spending. But
they are in Dubai.
So how much do we lose by people leaving the country for tax? I mean, it's very hard to figure out, but like for cheaper tax havens, or like you said in your untaxed radio series. Untaxing radio series.
Available now on BBC Sounds.
Really good, really funny, really interesting. But you said there was a guy he lived in London on 100K and he was going to move with his family to Scotland, but they have now a 48% tax.
This is the Laffer curve thing, isn't it?
Yeah, and they have a higher tax rate. So he's like, I'm not moving to Scotland because they've got higher tax. So how about the people like, I don't want to stay in England because of the tax rates?
So, you know, there's been no studies of that Dubai effect that I'm aware of. Yeah. There's lots of studies around, say, in the US, people moving from one US state to another. And the differences tend to be quite small. Really, it's the difference. Obviously, you're paying the same federal tax. It's just a difference in state income tax.
Elon Musk moved, though, didn't he? And I imagine that was a big impact.
Yeah, I mean,
California to Texas or whatever.
Yeah, you have quite, if you're wealthy, it can make a big difference. But for a moderate earner, it makes a difference, not huge. Here, if you're a moderate earner moving to Dubai, makes a big difference. So it's plausible there's effects. How big are those effects? Don't know. Is there anything we could do about that? Well, no, we can't. We can't cut our tax to Dubai levels. A large advanced economy that is, I mean, it's not just.
We don't have loads of oil to subsidise that, or slave labour from Pakistan.
It is just not possible. Not merely not politically possible, but it's not possible.
I mean, as someone who would be highly incentivised from a monetary perspective to move to Dubai, and I could do that. What I will say is, I'm tied here through family, through like the culture, through lots of other soft factors that, you know, seem to just outweigh the money. I mean, I can't speak for everyone, but, you know, that's my perspective.
There's only so many people in the end who can move to Dubai. It's a relatively small place. It's quite a long way from here. It's very culturally different. Scotland is in a slightly bigger pickle because it is just so easy to choose whether you live in Scotland or England for many people. So there's again, untaxing available on BBC Sounds. We talk about this and how...
I love how you say it in an advert voice.
You lock in.
Zones out, the eyes go glaze over. Like AI.
I probably need to learn to be smoother at this. But yes, if you listen to Untaxing available on BBC Sounds, you will find out how the Scottish Government is very generously running a controlled scientific experiment into how high you can push tax rates and collect more money. And they are right at the cusp on their own figures of increase in taxes actually losing revenue, almost at that point. We'll find out in a few years.
So this is the Laffer curve, and it's this idea that if go on. No, you want me to hit the buzzer? Yeah. All right. Oh. I'm saying it. But
Why buzzer?
I don't know.
Because people don't know what the Laffer curve is.
Laffer curve.
Clearly, I'm not trusted to explain what the Laffer curve is.
Should we talk about the Laffer curve?
Our producer.
Well, that's another.
I think the eloquent description that you put was, if taxes are, you know, 0, the country raises no money. If taxes are 100%, the country raises no money because, you know, at 100%, no one's going to work. And it wouldn't be just a step down. There's got to be a curve between that.
A bell-shaped curve.
Yeah, this point where it tips.
Now, of course, the problem with that description is every step in it is wrong. So I mean, it's an accurate description of the Laffer curve. Okay. But if taxes were 100%, it is not true that no one would work. I mean, I work for no money because I enjoy it and I want to do it. And there are other weirdos who are similar to me. So that's not true. If tax was 0%, well, there are some weirdos, not me, who give money to the government voluntarily. So the description isn't quite right. And the idea it's a smooth curve. I mean, in the social sciences, you never see nice, smooth curves. Apologies again to everyone listening to this who can't see my finger in the air. And probably apologies to the people who can, because it's not actually very helpful. But the basic proposition is correct, that there is for every tax, there is a point where if you raise the tax, you will get less money. So in the 1970s, the top rate of income tax was 98%.
I read, that's crazy.
No one who had advice paid that. There were a zillion things you could do to not pay it. So when they cut that rate, I am certain as anything that raised more money. But what applies to a 98% tax rate does not apply to a 45% tax rate.
And that's when the Laffer curve was thought about, was in this kind of high tax environment.
The same And the very same people who argued at the time that cutting tax would raise money, and in some cases they were correct, still make that case now when I think it's pretty clear it's not correct. So it's a political tool more than it is a useful economic theory.
But you think that on middle earners or on the income tax rates, we might be at the Laffer curve, like at the tipping point?
There's been some pretty compelling research by rather lefty economists as to what is the tipping point. Where is the tipping point? The tipping point's a bit above 50%. Now, if you currently are a additional rate taxpayer in the UK, paying 45% tax plus 47%, plus 2% national insurance, and then you had employer national insurance on that, which ultimately employees bear the cost of, your tax is right at that point. And there are plenty of points on the salary curve where you can be paying a higher marginal rate than 55%. If you're earning £100,000, your rate is over 60%. If you get free childcare and you earn £100,000, your marginal rate goes up to 20,000%.
Yeah.
So yeah, there are definitely points in our tax system where you could be cutting tax, and conceivably that would bring in more revenue.
The VAT threshold on small businesses that are direct to consumer. So for example, beautician businesses, if they hit the VAT threshold, they have to just up their prices and they can become non-competitive. So I know my partner will just stop working when she's near the VAT threshold because she doesn't want to charge her customers more. She becomes non-competitive.
But that's madness. So we have a tax system which is forcing your partner, and I calculated about 40,000 businesses across the country, to not grow their business.
Yeah.
Madness. Now, what do you do about that? So the one thing is say, well, we should raise the VAT threshold. No. If you do that, you're not solving the problem. You're just moving it into slightly larger businesses. And the larger a business is, the more economically important it is. So you're making the problem worse. Congratulations. Don't do that. What we should do instead is reduce the threshold. Now, if you reduce the threshold, a lot of small businesses will scream, but others will realize, actually, hang on, what's bothering your girlfriend isn't charging the 20% VAT, it's being uncompetitive versus other businesses that don't. But if you put everyone in the same position,
God, you just
it's
blew
different.
my mind.
And if you use the revenue,
we should bring it down.
Yeah, you should bring it down so that essentially anyone who's beyond a hobby business is charging VAT. That's what they do in most of the continent. And if you do that and you use the revenues to cut the rate of VAT, it wouldn't cut it very much, but it would cut it by a bit. You make clear this is not a government tax grab. This is making the system better. This is boosting growth. It's a pro-growth tax change that a brave government could introduce. Did this government do it? Nope. Instead, I mean, again, all the politicians, the smart ones, everyone at the Treasury knows this. And their answer is, well, yeah, okay, we will freeze the VAT threshold, we'll let inflation erode it. And so in 20 years' time, we'll get there. Seems to me the country's in a growth pickle and we can't wait 20 years' time. We need to be doing bolder things. So VAT, absolute example of where there is a big problem. It has a solution everybody knows, but the politicians are too scared to do it. They don't think they can sell it to the public.
And there's other areas of VAT that you've looked at as well, which I think might be kind of unpalatable, would be, say,
the fucking Jaffa cakes.
Yeah.
Jaffa cake. Is it a cake or is it a biscuit?
They're pretty palatable.
God, I can't do the pimping of the radio show again, but we have a whole episode.
Where is it? Where is it available, sorry?
I believe it's available on BBC Sounds. So Untaxing, the second episode is about the Jaffa cakes. And it's this oddity that before we joined the EU, we had a confusing series of duties and sales taxes, and there was a tax on luxuries. And it was thought that a chocolate biscuit is a luxury and a cake is not a luxury. Why that is, I guess maybe a sociologist would have some theories. And VAT inherited elements of that. Some people say VAT is a tax on luxuries. Not true. Not how it works at all. But it bears the kind of remnants, the archaeological remnants of that. So some clever person at McVitie's thought, we are going to argue that our Jaffa cake is in fact a cake.
McVitie's Biscuits, I might add. That's the name of the business, isn't it?
That's a highly prejudicial.
You said that. They're called McVitie's Biscuits. It probably didn't help, did it?
But it was called a Jaffa cake, and they're like, it's clearly a cake. It's in the name.
Sorry,
so
I can't.
And so you had these very, very highly professionals throwing out arguments like, well, if you make a really big one, it looks like a cake, and if you leave it out of a box in the air for a while, it will turn soggy.
Hard.
Stale.
It turned hard.
Stale.
God.
And then the biscuits turn soft.
Okay, you're much better tax lawyer.
I mean,
than me on this. Yeah. So these are arguments that are just childish, but they are relevant arguments. We had another one recently about the mega marshmallows. The mega marshmallows? So marshmallow confectionery is taxed VAT at 20%. An ingredient, 0%. Mega marshmallows are large marshmallows sold in a packet that suggests they're used for s'mores, which an American thing. You get a skewer, you put a marshmallow and a biscuit on it, you toast it over a flame, and it's disgusting or delicious, depending on your predilection for hot, sweet things. And mega marshmallows won in court. And this is a ridiculous time suck. It's hugely inefficient. It makes life complicated and expensive for shops. And you have daft distinctions. Another one is children's clothes. So children's clothes, 0% VAT. Adults' clothes, 20% VAT. You can go to the Harrods website now. You can see children's gold lame jackets at £4,000, 0% VAT. How is that in the public interest? So in a sane world, what would you do about that? Well, you'd scrap the VAT 0% on children's clothes. You would uprate child benefit so that the average family doesn't lose out. Job done. But again, that requires some political balls, because people say, "Oh, you're taxing children's clothes. You're taxing food." All of this, there's an obvious populist counter argument. So doing the right thing is politically hard.
How do you get that message over to people? How do you say to everyone, if we just bang it on your kids' trainers and your food and all of this?
So I have a theory. My theory is that all this is doable if it's clear that you're not raising tax as a whole, that clearly you are raising it on this, but then you're lowering the rate for everyone. It makes it a different dynamic. It's not government taking money from you.
So a little quiz for you. Do you know what any of these things mean? ISO 27001, SOC 2, the EU AI Act, or DORA? If not, no worries, but if you do, it probably means you work for a company that cares about security and compliance. If you're a growing business today, you have to prove that you comply with security and privacy frameworks like these, and GDPR, so that you can land big deals and grow your business. But the problem is, achieving and then maintaining compliance with these frameworks is time-consuming and complicated. This is where our partner Vanta can help your business. Vanta automates up to 90% of the work and 85% of the associated costs for in-demand frameworks. So if you want to prove that you're secure and compliant, check out Vanta. You can also get $1,000 off Vanta if you go to vanta.com/makingmoney. So that's vanta.com/makingmoney for $1,000 off, and there's a link in the description for you.
I'd like to speak more about the property stuff though, because I think this one. So you're in favour of essentially scrapping every from property tax and replacement of a land tax.
They are all shit. So stamp duty, land tax, clearly shit. Everyone knows that. Business rates, super shit, because they're uprated so irregularly that you can have a high street where the rents have collapsed. Business rates are now still high.
Southport. And the businesses just can't survive. Like the local independents, you just get all these charity shops.
Yeah.
Because I guess they get favourable rates, right?
Or none. Yeah.
Yeah. So that's you just get 15 charity shops.
No one wins. You end up with a crappy high street and less tax revenue. Disaster. Council tax. I keep banging on about this, that someone living in a £100 million penthouse in Mayfair pays half as much council tax as someone living in a semi in Bolton. What is going on? How can that make any kind of sense? So you could kind of just tweak all of these a little bit, and maybe this government's going to do that. But it would be much better to say, you know what, we need something really radical. We need to sweep all of these away, replace them with a modern tax that's actually driving growth rather than holding it back. And you could do that. The window for doing that is closing rapidly because it would be so unpopular in some quarters. You need to do it really early in a parliamentary term. And I mean, if this government does that, I will eat my T-shirt. It's just not happening.
And they would need to do it in the next budget, basically.
Probably the last one. But yeah, the next one is the last chance of any major tax reform. I fear we won't see it.
Were you hopeful that
I was hopeful.
I was hopeful.
What is the best possible scenario for pro-growth tax changes? Well, it'll be a government that comes in saying it's all about growth. We're really focused on growth with a large majority, with almost certainly a 5-year term. It's never going to get better than that. And they didn't. And
do you think tax reform would deliver growth and prosperity for the UK? Is it that simple?
Well, I'm not an economist, but if we can identify parts of the tax system that hold back growth, your girlfriend, her growth is being held back by VAT. Magnify that effect across the economy. Throw in income tax and the cliff edges in income tax. Throw in corporation tax and all of its complexities. Throw in land tax. All of these are pro-growth tax changes. What is the overall economic effect of fixing all of them? Don't ask me, not my job. But it's going to be positive.
There's something when we're clicking around for a bit of growth. Yeah.
Yeah. Doing the same thing and expecting anything to improve is not going to work.
I want to come back to the housing stuff again, because I think people are really going to be focused in on that. I read the paper that Martin Wolf talked about, because you cited his article, so this is great, and then he referenced the paper, and within it they basically said, they were using America as an example, but they said that an increase in the tax rate on the value of land from a level of 0.55% to 5.55%, with reductions in taxation on produced capital and labour. So you increase the land tax and you reduce taxes around working. They think that would raise output by 15%. So they're talking about GDP there.
Yeah.
That's massive.
Again, this is kind of conventional amongst economists of left and right, that we should be taxing land more than we tax labour. But it doesn't happen. It's been a political idea since Henry George in the 19th century, and no advanced economy has done it. Now, I'm not being that ambitious. I'm suggesting replace our shitty land taxes with a better land tax. You could go further and use some of the revenues to reduce income tax, but that means even more complaints from people in large houses. If you remember Ed Miliband's mansion tax, it was so slated at the time. A cynic would say because it affected a lot of newspaper editors, but it was so slated at the time that even Jeremy Corbyn didn't include that or anything like that in his two manifestos. The Labour Party was so bruised by the mansion tax experience. And I fear that's why we won't see any kind of major land tax reform, just as the pasture tax experience means we're not seeing VAT reform.
We had Martin Wolf here. He was great. He was very sharp. Very sharp.
He's a very smart guy.
Yeah, he is. And he said something in his article that made me think about it. He said, basically, I bought a house in London and I have benefited from the collective work of everyone in London, and the price of the land under my house has risen.
Yeah.
I did nothing for that. He's like, I was part of the London system, but actually that London system's benefited from the work ethic of millions of people and the taxes that they've paid to improve the system. So by not taxing the land, you're just giving people a free ride on the backs of others' efforts, essentially, is how he positioned it.
The problem is that people who are living in a house which is appreciating value don't think that. They think they've done something clever. And any attempt to tax that is going to be hugely resisted by boomers living in large houses who've paid off their mortgage. And these people vote.
Yeah.
So it's a hard one. And they're probably not going to move house again, so they don't much care about the other taxes that are so damaging. So it's a difficult political problem.
Do you think there's taxes that are not a difficult political problem which should just go after straight away?
Sure, corporation tax simplification. Absolutely, you could do that. Capital gains tax. How can it be that someone can change their earnings into a form that's taxed at so much smaller a rate? Makes no sense.
The Beatles.
Yeah,
I heard this on BBC Sounds.
You are just goading me now, and I'm not going to do it. But if anyone wants to hear that, they could go to BBC Sounds and listen to. I think it's the second
one. It's the second
I
episode.
said second before, and I was wrong. It's the second episode, which is about how the Beatles were, when these tax rates were super high, 70, 80, 90, almost 100%, they weren't paid by the very wealthy because there were so many ways to get around it. But if you are someone from a pretty modest or working class background who suddenly got a lot of money, you didn't know that. So the people paying this tax were a lot of the time pop stars, and the Beatles were paying a hell of a lot of tax. So they came up with this brilliant wheeze, which is or rather their advisors did, which is they would put the rights to the royalties on all of their music into a company. They listed that on the stock exchange, and they sold the shares they owned in the company to the public. That meant they wouldn't get the royalties on that anymore, but they'd get this big sum of money from selling it. That was a capital gain. And at that time, capital gains were not taxed. So instead of paying 95% tax, they paid nothing. But it's a cautionary tale, because it turned out over time, the royalties were enormously valuable. And the Beatles had sold them. And these rights changed hands again and again, eventually ending up with Michael Jackson. The Beatles had no control over them, didn't get the money. So lost probably tens of billions ultimately. So the lesson is, don't ever do something just for tax purposes, because often that means you're doing something that doesn't make economic sense and it's going to cause you a problem.
How can a consumer know what's dodgy and what isn't? Because if you type into Google how to avoid tax, you get a load of shysters.
Yeah.
Like they're right there, and the HMRC are doing nothing about that.
The HMRC historically was not a regulator. If you set up a business avoiding tax, HMRC didn't really touch you. They would go after your clients once they found out about it, sure, but you as a business, they didn't go near. And 30 years ago, 25 years ago, tax avoidance was done by Barclays Bank, ICI, all the big companies avoided tax, and firms like mine would construct elaborate schemes for them. And they stopped doing that, not because they suddenly became ethical, because it became clear the schemes wouldn't work. Some of the people who'd sold those schemes wanted to keep doing it. They couldn't say it to Barclays Bank because Barclays Bank would say, fuck off, that's not going to work. But they could go to an IT contractor who's never going to get independent advice, never going to find out the scheme doesn't work. And so these tax avoidance schemes became sold to people on pretty modest incomes. And that creates a big public problem because it's really a mis-selling scandal. There's a consumer protection angle, and no one is looking out for the consumer there at all. So it's a very long answer to your question, which is HMRC wasn't set up to and no one acted to take control of this. Belatedly, there's a realization that this has to end. So there's one of the areas where I feel we've been a bit influential is making a fuss about this kind of avoidance. And there's a government consultation announced in the budget, which is really going to stamp down on people selling these schemes. New criminal offences, new civil offences. Hopefully it's going to make a difference.
Yeah, they should go after the seller, the dealer, not the taker.
Not the taker, yeah.
Because
the problem is
it's like arresting someone for buying drugs, but not arresting a drug dealer.
Yeah.
Well, but the difference is that if you're buying drugs, you have to buy it from someone on your street who you go and give the money to. But if you're buying a tax scheme, you're going to buy it from some company in the BVI, owned by a trust in Vanuatu, and maybe you can trace it back to someone in the UK, but that's often quite hard. So much easier for HMRC just to go after all the little people. And that's what they did. We are going to be writing quite soon about how you could go after the big guys, not just going forward, but maybe retrospectively.
So a lot of people invest in digital assets, and obviously the tax in the HMRC is not quite up to date with Bitcoin and digital assets. So like you mentioned earlier, some people might use it to avoid tax nowadays.
Evade tax.
Avoid is the good thing, evade is the bad thing, yeah?
So
avoid was what you got paid for.
It was so not. I will see you in court. My clients paid exactly the right amount of tax, not too much, not too little.
I'll see you in court.
This is important. So I should now pompously explain the difference. So, right, evasion is dishonest. You are concealing, you're hiding something, you're lying. So you pay me the 20 grand we agreed for this interview. I don't declare it. Why are you laughing? I don't declare it to HMRC. That is tax evasion.
Yeah.
Tax avoidance it's not really a defined term, but most people would say it means using some kind of loophole or unintended result to not pay tax. So you pay me the 20 grand, I buy some investment product which supposedly generates a £20,000 loss, which shields the income.
Yeah.
So
it's not illegal avoidance.
In theory,
but
that's not illegal.
Illegal.
But this shit just doesn't work these days. If I really tried doing that, I think I'm probably dishonest. I think it probably is tax evasion. So in theory, there's a difference between the two. In practice, it's quite blurry. But anyway, the classic crypto thing is you buy for £1, you sell for £20,000, you don't tell HMRC. That is tax evasion.
Yeah. So what are HMRC doing to kind of crack down on this? Because obviously that's probably a loophole.
Pressure on the big brokers.
A lot of people
on Coinbase and that. They put a lot of pressure on them to
and there are also
share.
other exchanges. Like there's so many crypto exchanges. Like might be in Russia, might be in Singapore, might be in France. So like you might not have jurisdiction.
Ultimately, it has to touch the banking system. If people want to get cash out, it has to touch the banking system. So you can get at it that way. And there's an OECD initiative which kind of does that, which will create automatic reporting. But HMRC screwed this up initially. So back when crypto just started to be a thing, we're talking early 2010s maybe, HMRC came out with some guidance that said crypto is basically gambling, so it's not taxed.
Yeah.
And I think they did that because they thought, oh, this newfangled thing the kids are doing, people are going to lose lots of money. We don't want to give tax relief for that, so we're going to say it's gambling. It was wrong as a matter of law, but I think a lot of people made a lot of money and didn't pay tax.
It was the
because
good
of
old
it.
days.
Yeah. HMRC
The wild, wild
then,
west.
HMRC then, as they often do, they're going to wake up with a start and go, what's going on? And they reversed course, and clearly it's taxable. But if you say to me, I've just bought some and made some money, is it taxable? Even if I didn't hear the middle bit, I'll say, yeah, it's taxable. Can't tell you exactly how, but it's taxable. So it's taxable. It's pretty easy how it's taxable for almost everyone. It's taxable as a capital gain.
And do you think that there's been improvements in HMRC's ability to go after people who are, because there's going to be people listening going, good luck.
Yeah,
Do you know what I mean?
definitely.
I mean, the thing about tax evasion is that HMRC can go back 20 years. So if HMRC in 10 years' time get records of your crypto transaction today, they can and will do you. And it's so much easier for them than cash in hand because it's all computerized. They can do it in bulk. They don't just send some inspector outside a kebab shop to count how many kebabs are sold on a particular day.
There's a record of it all on the blockchain.
So they could be quite chilled on the basis that they go, we've got years to figure this out, and we just go back and hit everyone.
The blockchain is forever.
Yeah, it's a record of every transaction.
If a tax authority has no clue, it's a great way to evade tax. But once the authority rises up, it's a really bad way to evade tax. So actually, the dark secret is that HMRC likes the blockchain because it's
records.
Ultimately, they can do it at their leisure.
But they can't backdate it to before they introduced, like when they thought it was gambling.
They can. Yeah, they can.
They can still go back and say
they're wrong. You
There's
see.
basically the whole history of crypto they can backdate.
So they can backdate
They can go back, but before Bitcoin was
but there
invented.
were no no laws back then.
You don't need laws. Again,
there were no tax regulations back then.
You don't. There aren't now.
go back.
There isn't a single tax. I think there isn't a single tax regulation on crypto. You don't need it. Capital gains tax applies to buying and selling anything. There's no capital gains tax on tables. But if I buy an antique table and sell it at a gain, I'm taxed. So pay your tax on crypto, definitely.
There was
and if you didn't, you should be voluntarily doing it because then you might escape penalties. If HMRC catch you, they will ding you with penalties. If you have a large crypto gain, find a good tax advisor, meaning someone with letters after their name.
Understand. That's the problem. My accountant's like, what are you talking about? None of them understand. There aren't really crypto tax lawyers currently.
You shouldn't need to be. There is nothing complicated about crypto for a good tax advisor. So maybe an accountant who's not a tax accountant wouldn't be able to do it, but anyone who's a member of the Association of Tax Technicians or the Chartered Institute of Taxation, they'll be able to do it.
Good advice.
So look for a tax advisor who's ATT or CIOT, and if you have significant untaxed crypto gains, it's in your interest to fess up.
Above the tax-free threshold, would you say? Or
yes, I mean
the threshold's only
strictly.
$3,000.
Yeah.
It's dropped.
It's just tiny.
But significant is relevant, isn't it? Someone on minimum wage might have like 20K in crypto gains. That's significant.
But it used to be more. You used to get. I can't remember, 12,000.
Yeah, it used to be. Now it's this year it's 3,000.
So for someone making small gains, there's nothing. But there are quite a lot of people who made six-figure gains. Didn't pay tax, and I would strongly advise them to go. I can't give advice, but I can. I would strongly advise them to
pay your tax. Contact.
You think it's coming at some point, and you're not.
I think they will get. I think they will get caught. Someone who got cash in hand for cutting someone's hair is probably never going to get caught. Don't do it, kids. But the risk of being caught is low. But here, the risk of being caught is high. Because
the digital records, you investigated a former Chancellor and shone a light on
Mr. Zahawi. Yes.
Yeah. It was around YouGov. The polling.
So, at the time, I thought he was one of the most interesting and impressive figures in politics. So, how many British politicians have founded a billion-dollar company? In recent times, none. Probably, maybe Robert Maxwell, not a good precedent, but that's amazing.
Rishi Sunak married into one.
You don't get points for that. So there was this funny story that he was being investigated. Zahawi was being investigated by the NCA and HMRC. The NCA are really fucking serious people. None of the tax things I've looked at have ever merited the NCA looking at them. So that really got my interest. And I started looking into everything to do with Zahawi. And I found hidden in some of the documents that created when YouGov, the polling company, floated, it was clear that he'd held his shares in YouGov through an offshore company that supposedly was owned by his father. And it's really janky tax planning, really poor quality. It's the kind of thing that if you go to the pub and talk to someone will say, hey, you don't have to pay tax on this, just have your dad own it through a Gibraltar trust. No tax advisor would say to do that because it's mad and doesn't work. So it's not that he avoided tax, he tried to avoid tax and it failed. And I thought a whole bunch of tax was due. And he initially tried to ignore me, then sent lawyers to threaten me. And I don't think he knew what the Streisand effect was, because that meant I suddenly changed from being a sort of tiny think tank read by a few hundred people into just everyone on the internet wanted to read about how Zahawi had tried not to pay tax, how he was threatening the person reporting on it. So it all blew up. And eventually, a brilliant journalist at The Sun got a leak showing that not only had he not paid his tax, but HMRC had caught him. And he'd paid the tax and admitted it. At the same time he was sending lawyers to threaten me, he was negotiating this with HMRC. And he was sacked.
See you in court, bitch.
He was sacked. Mic drop.
Yeah. Who are you investigating now?
Who am I investigating? I'm not going to tell you.
How are you investigating people?
I'm really lucky. I get all of these tips from accountants around the country who see all kinds of mad shit and have no one to tell about it. And now they can write to me.
Is there no confidentiality between your accountant and the customer?
Oh God,
like a lawyer.
Sorry, this is not.
Sweating, aren't you? You're sweating.
I'm like, I need to make a quick phone call. I'll be right back.
Who are you talking to?
Who have you been talking to?
It's never the accountants doing in their own clients. I mean, they'd have to be crazy to do it. No, it's that you've got this accountant in Chelmsford, and they've got these lovely clients and everything's great. And then one of their clients goes to them and say, hey, someone's selling this brilliant scheme. Can I do this brilliant scheme? And the accountant says, no, you have to be crazy. The client says, well, fuck off then, and goes and leaves the accountant and goes to these crazy, greedy criminal people. The accountant sees that and the accountant's furious. The accountant's done the right thing and has lost the client. Yeah. And they can write to HMRC, but then they think it just goes into a black hole and they'll never hear again. They can write to us and we'll look at it. So we get all these brilliant tips, and I've got so many half-cooked investigations that I need to finish cooking and put out. There's a lot of them.
Within the political space, was your experience that was Zahawi, sorry if I mispronounced that, was he an exception?
Oh, he's an exception. Very few politicians in the UK are rich to that degree. And that kind of tax avoidance, evasion that he did, avoidance, so somewhere in between, you'd only do it if you owned your own company. And so for the average MP, I mean, these days, most MPs famously don't have experience or earnings before they become MPs. So they couldn't do that, even if they wanted to. We've looked into a couple of others. So Jeremy Hunt, there's stories Jeremy Hunt avoided tax when he sold his business or when he bought a portfolio of houses. Wasn't true. He didn't.
So the whole 7 houses stamp duty thing,
it was just bulls. No.
It wasn't true.
No. I mean, yes, if you buy one house, you pay stamp duty on it at a higher rate than somebody who buys 5 or more houses, and that's the way the rules work. And he bought, it's 6 or more. If you buy 6 or more houses, you pay at the commercial rate. And the reason is because otherwise large-scale commercial landlords couldn't really operate. So that's the policy. He bought 7, so clearly he didn't do that just for tax purposes. There are people like Gary Stevenson who said, it's a Tory loophole. And it wasn't a Tory loophole at all. It's a rule created by the Labour government when they created stamp duty in the first place. So no, Jeremy Hunt didn't avoid tax. Silly.
Was it a marmalade business he had in Japan in the past?
That sounds amazing. Didn't know about that. No, it was an education
failed
business.
Marmalade business. I'm pretty sure. It's on his Wikipedia.
Okay, we're going to have to look into Japanese marmalade.
Yeah.
No, he sold an education business he created. He made quite a lot of money, and people told me, he avoided tax on this. And we had a look, and no, he sold it in the way that you do if you're paying all your tax.
Final question for you. As a man who retired very young, how did you structure your portfolio prior, like in terms of investments? Not from taxation perspective. I mean, like how do what's your view investing, and what does that look like from your end?
So one of the reasons I could retire early is that I invested fairly sensibly through the amazingly boring strategy of putting it in index trackers. So
Music to our ears.
Global, S&P, like where were you at, do you think?
That has changed a few times, but it's always been ETFs because I don't like the liquidity position of funds, and I don't like the fact that if I sell it, I don't know the price that I'm selling at. So always ETFs, the physical rather than synthetic.
Yeah.
Always the fairly big ones with tight spreads. But which one you put it in, if they're tracking the same index,
No.
doesn't matter. So yeah, I mean that's secret to my investment not quite success.
Just big, cheap index funds,
Go
ETFs.
for investment mediocrity. Don't look at it too often. It's like I had a moment when after Trump's brilliantly innovative tariff announcement, wow, shit, I always thought I should have sold these when Trump comes in. Maybe I should sell it now, and I didn't. I stopped from doing anything, and now I know that was the right decision. And now I'm kind of thinking, Trump, he's going to do more of this. The markets are being irrational. Stocks are going to fall. Maybe I should switch it. But no, I mustn't.
No.
I shouldn't look at it. I shouldn't think about it. I should just sit on it.
You should focus on being a tax expert and delivering value through that, and let the markets just do what the markets do.
Yeah, although the value I'm delivering, I'm not getting paid for. So my economics are a bit shit.
Well, you plug in the BBC Sound stuff then if you're not getting paid for it. You just want the fame nowadays.
Just a clout.
The clout.
Just a clout.
No, I want to be able to move tax policy a tiny bit in the direction of sanity. That's the thing that drives me. I want to have fun, and for probably reasons of my personality defect, I enjoy this, but I'm doing it because I want to change policy.
How'd you feel after that one, mate? Talk about tax.
Absolutely fine. I mean, I pay exact right amount of tax, not too much, not too little. So I've got nothing to worry about.
Got good advice.
Great advice.
Actually, it's relevant. So we now offer a service for self-employed people that can help them with their tax, because I think it is quite complicated, isn't it?
Yeah, me using Encounter was a game changer this year.
Yeah, you moaned about that though.
Yeah.
You told him it was too expensive.
Yeah, but he saved me a lot of money, so I was pretty happy with that.
I need to sort you out with a northern boy, mate. That's
Damon,
what you need.
sort me out with your accountant.
You need a good accountant from Derby, mate. That's where the rates
that where
are
he's from?
cheap. Yeah, cheap.
Yeah, these London accountants are bleeding me.
That's what I mean. They got all these fancy offices. Retiring at 48. What's going on there? What is going on there? Yeah, so our service is not that expensive. We'll leave details of that below for you.